Welcome to GraceKennedy's Investors Briefing on our year-to-date September performance, and we'll also be discussing other strategic issues with our investment community this afternoon. My name is Don Wehby, and I'm the Group Chief Executive Officer. With me is Mr. Frank James, Group Chief Financial Officer. We welcome all participants who have joined us via the internet for this audio conference. The briefing has been scheduled to run for 40 minutes. We will use 25 to 30 minutes of this time for presentations and the remaining time to accommodate your questions. During the question and answer session, you're welcome to share your questions by emailing us at gkinvestor@gkco.com. Let me repeat that, gkinvestor@gkco.com. You may also call or send a text to our communications team who are here with us at 809-1121, that is 876-809-1121, or 876-809-0464. So I will now begin my presentation. For the 9 months ended September 30th, 2017, the GraceKennedy results I would describe as satisfactory. We have achieved group revenues of $69.3 billion, an increase of $2.6 billion over the corresponding period of 2016. Net profits for that same period was $3.75 billion, an increase of $51.4 million. It is important to note in those figures, and Mr. James will expand on that, that in both periods we had one-off items, or what we describe as non-recurring gains. For the period of 2016, you recall on our audited accounts, we reported a liquidation gains of $567 million, and in 2017, unaudited, we are reporting a one-off gain of $418.5 million, which is a result of the Consumer Brands Limited acquisition, and we will expand on that in the next session. What is very encouraging for the performance of the GraceKennedy Group, the third quarter, if you were to look at the third quarter of 2017 versus the third quarter of 2016, our profits are up 56.9%, and that includes the one-off gain. Without the one-off gain, the performance is still satisfactory, in fact good, with an increase of 14.6%. Let me touch on a few segment reports. The food trading division did very well. We grew both in revenue and pre-tax profits. I think what is very encouraging for us is that despite the significant fall-off in the corned beef sales, and we are still at about 40% of where we were the previous year, we are showing growth in revenue. The corned beef factor really affected us in Jamaica and in the Caribbean. What I'll say is that we have put in place the strategic marketing plans to ensure that we recover in terms of corned beef revenue, and we are seeing over the period that we are in fact recovering in terms of corned beef revenue. Also, what we have noticed, and we're very pleased that our other products, the Vienna sausages, which is produced in our factory in Sablamar, has gone up significantly, and our mackerel sales has also gone up significantly. So while we have not replaced in its entirety our corned beef revenue, our other products are doing exceptionally well. A major highlight for us is that the Consumer Brands Limited transaction, which I mentioned earlier, became effective August 31st, 2017, and the transition has gone exceptionally well. Mr. Athol Smith, who was a previous major shareholder and CEO of that company, he has agreed to be our chairman of CBL, and I think Athol will make a big difference in terms of a smooth transition. Let me just speak about the performance. Well, the performance for the first month of CBL and integration has gone very well. In fact, the first month, the revenues are significantly above what we anticipated, and also the profits. And really, the consumer brand is majority Procter & Gamble. But there are other good principles which we have acquired with this company here, including Del Monte Foods, which is a popular brand in the United States, Eastern Caribbean Flour Mills, and there are others that we have acquired. Hilo opened their new supermarket, or their renovated, I call it new, but is renovated supermarket in Portmore. I can say to my colleagues listening that it is a fantastic, fantastic supermarket. I was there for the opening, and I'm not often speechless, but I was so impressed with the new Hilo, I was in fact speechless. It's really a beautiful supermarket. First Global Bank, we are hoping to open First Global Bank as part of our integrated retail strategy in the Portmore Hilo before the end of the year. And that is continuing our strategy of integrating our retail, First Global, Western Union, and our supermarket. And we'll continue to roll that out throughout Jamaica. Another set of good news is that GraceKennedy USA LLC, the performance of that company has improved significantly. Both brands, the Lafayette brand and the GraceKennedy brand, continues to show growth. I want to remind the investors and the listeners that we acquired Lafayette, the company with the brand, in 2014. Our strategy was very, very clear and very simple. We said that we wanted to be the #2 ethnic brand in the United States of America. And that's the strategy, that's the focus that we are executing on. And to give you an example, the Caribbean food market, the size, I've seen a number of figures thrown out there, but there is some similarity in terms of 200 million to 300 million US dollars. The size of the Hispanic market is 5 billion US dollars. Our strategy, colleagues, listeners, is to break out and become the #2 ethnic brand in a much bigger segment of the market. We're executing well. We're going to be relaunching the Lafayette brand with some really nice, attractive packaging next year. And I'm looking forward to seeing significant growth with the Lafayette brand. What is also very interesting in terms of the Grace brand, which is showing growth, we have been growing significantly in the chains, Winn-Dixie, Publix, Walmart, etc. And this is in the US market. We launched our Grace Jamaican patties, and colleagues, it is moving off the shelves in Walmart and in Target. So I would encourage all of you who have friends and relatives in the United States of America, tell them to try the Grace Jamaican patties, especially the mild beef. That's my favorite. But we are very happy about that. Grace Tropical Rhythms, for those of you who are familiar with Florida, we got into Polar Tropical in 47 stores, and they are also doing very well. So we are very pleased with the performance of our food business in the United States. To continue to grow that business, it's going to call for a number of investments in terms of marketing and infrastructure, but we are confident that that investment will pay back in the future. Grace Foods Canada is also doing very well. They have shown double-digit growth in the Walmart store. And you recall we announced a year ago that we are the category captains for Walmart, and that appointment is assisting us significantly. Strategy for Grace Foods Canada, we are looking to expand into Western Canada, and we have already started to roll out with a third-party logistics expert helping us in that regard. Grace Foods UK, the nourishment has been challenging in terms of the growth. As you know, nourishment is the enriched milk drink owned by the GraceKennedy group of companies through acquisition in 2007. We are putting in place a very focused and strategic marketing plan for that brand to continue to grow. Some of you would have read that we have brought on our own Daniel Sturridge from Liverpool, and English player, to be our brand ambassador, and the feedback that we've been getting from our consumers is excellent. A lot of work to be done in terms of the UK to get the nourishment brand growing again, but we have the right strategies in place, and I expect that it will continue to perform well in the future. Lacquer, our food business in Lacquer really suffered for corned beef. St. Martin, British Virgin Islands, and Dominica. Again, we are putting in place the necessary plans for growth. GraceKennedy Financial Group recorded growth in profits and revenue. The star performer there is First Global Bank. Our bank, First Global Bank, has been having an excellent year, and we launched First Global Money Link, and we can speak a little bit more about that later on in the meeting. Peter Moses, an experienced banker, one of Jamaica's most renowned bankers, has been appointed the chairman of that board. I welcome Peter. He's going to make a big difference in terms of the strategic direction and policy direction of First Global Bank. I also want to use this opportunity again to thank Mr. Douglas O'Rain, who has been chairing the bank from 2001, for his excellent stewardship over the bank for that period of time. Grace Insurance segment, and I'm going to ask Frank in his presentation, Mr. James, to expand on the whole reinsurance program. As you would have imagined, we are expanding in the English-speaking Caribbean, and there are 2 islands primarily which we operate from or operate in that were affected in terms of Turks and Caicos and Dominica. What I'll say is that we have made a provision in our accounts for September. We have good reinsurance in place, and we don't think it will have a significant impact based on information that we have at this time. Money services has shown growth again in both in revenue and pre-tax profits. Trinidad, Cayman, and Guyana has grown. One may wonder, why didn't I say Jamaica? Because Jamaica is one that has shown significant growth every year for the last number of years. Where we had to take strong actions, as I said to my team here, compliance is a competitive advantage for the GraceKennedy Group. We have zero tolerance as it relates to any fraud or any scamming on our network. So we actually suspended 9 agents to do a comprehensive review of the systems that we have in place. I'm happy to announce that 8 are already opened up, and Western Union and GraceKennedy, we have done our serious due diligence on the network, and we are now quite satisfied that the network is safe. Having said that, we're going to continue our fight against fraud, and we'll continue to invest very heavily in technology, infrastructure, and processes to support this business. I repeat, compliance is a competitive advantage for the GraceKennedy Group, and we have zero tolerance as it relates to any abuse of our system. On a softer note, which is something that I'm very proud of, GraceKennedy through a Bill Johnson poll in June of this year came out on top in 2 categories, and we are extremely grateful to our customers, our consumers, and all Jamaicans who participated in this poll, who really made us feel proud of ourselves, and our staff were very motivated by that we were the top company in a number of areas. Once again, I would like to thank all, and I'm now going to hand over to Mr. Frank James to get into some more details, and then we'll be happy to take questions. Frank, over to you.
Thanks very much, Don. I'll start with the income statement. As Don indicated, our revenues are up 4%, or $2.6 billion, with total revenue reaching $69.3 billion. 3 out of 4 of our segments showed growth in revenues, with 1 segment declining, our insurance segment, and I'll come back to our insurance segment later. Our net profits are up 1.4%, or $51 million. And this actually reflects strong performance in the 3rd quarter itself. So if we take our 3rd quarter net profit alone, it grew by $568 million, or 57%, inclusive of $455 million in non-recurring gains, of which the majority of that relates to a gain on acquisition of consumer brands, as Don mentioned. And also, we continued our efforts at liquidating non-operating subsidiaries for efficiency in the group. and that also contributed to the non-recurring gains in 2017. As we had disclosed in previous briefings and shareholder reports, we also had non-recurring liquidation gains in 2016. So if we are to adjust for these non-recurring gains in both years, we'll find that our third quarter standalone profits would have grown 14.6%, reflecting strong operating performance, particularly in our banking and investment segment, food trading, and money services segment. In profits, one of our segments also declined. The insurance segment, again, showed a decline in profits, and again, I'll elaborate on that shortly. To get into a little more detail on our revenue growth, the largest contributor to our revenue growth was our food segment, contributing $2.1 billion of the $2.6 billion in growth. And this reflects growth both in our Jamaican market as well as our international markets, with Jamaica actually growing faster at 5% versus 3% for our international markets. As Don indicated, we're particularly pleased with the growth of our Jamaican market against the background of the ban on corned beef. And it really demonstrates the resilience and robustness of our foods portfolio, where other products have been able to more than compensate for the reduction in corned beef sales. We also had the addition of our high-low Ligani store for the full 9 months, which has continued to drive revenue growth for high-low and for the domestic market. Growth in the Jamaican market was also supported by the addition of the Procter & Gamble line of products and other lines of products through the acquisition of Consumer Brands Limited, which in just 1 month has delivered over $200 million in revenue for the group. The addition of other principal brands, such as Lucasade, has also contributed meaningfully to revenue growth for the 9 months. Turning to our international markets, revenue growth was mixed in our international markets. Don spoke to the UK foods business, where our lower sales of nourishment or milk-based drink resulted in lower revenue for our UK foods business. This was more than offset, however, by very strong performance from our Canadian business, which was up 14% with double-digit growth in Walmart, and we have started, as Don mentioned, our growth into Western Canada. We also saw good growth for our US food business, delivering 7% growth, with both the Grace and Lafayette brands growing revenue. Our banking and investment segment experienced good growth of 8%, and that was led by First Global Bank, which had year-over-year growth in loans of 8% and significant increase in gain on sale of securities. In our money services segment, we had 5% revenue growth, with Guyana and Trinidad and Tobago delivering very strong growth. Our insurance segment, as I mentioned earlier, declined in revenue by 3%. And this was contributed to by both our broker in Jamaica as well as our underwriter in Jamaica, that's Allied Insurance Brokers and GK Insurance, respectively. In the case of Allied Insurance Brokers, we have continued to see the challenges on our premium rates. Up to the third quarter, premium rates in the industry continued to be low. However, some hardening of rates is expected with the recent significant hurricanes in the region. We continue to grow our regional insurance business, and we are pleased with the double-digit growth of our St. Lucian underwriter, GK Insurance, which recently expanded into St. Vincent. With this growth in revenue, we continue on our path to becoming a global consumer group, and revenue outside of Jamaica has fallen just shy of 50% or of total revenue at 49%, with North America contributing 26%, Europe, including UK, contributing 15%, while Africa remains under 1%. In terms of our profit performance, we had a strong third quarter with a 57% increase in profits, bringing year-to-date profits to $3.75 billion, up 1.4%. Again, adjusting for the non-recurring gains, our year-to-date net profits would be slightly up 0.7%, but the quarter's profits were up 15%. With expenses growing slower than revenue, increasing our efficiency ratios. I indicated earlier, however, that one segment saw a decline in profits, and this was our insurance segment, which declined 21%. While the segment declined, our underwriter in St. Lucia, GK Insurance EC, saw good growth in profits. In Jamaica, however, as spoken to earlier, revenue pressures impacted Allied Insurance Brokers' bottom line, as well as in the case of our underwriter, GK Insurance, we experienced lower investment returns and higher claims as a result of the hurricanes in the Caribbean in September. We continue to assess the impact of Hurricanes Irma and Maria, and we are very satisfied that our reinsurance programs remain robust to limit the impact of these events on our balance sheet. As a company, we have also reached out to support our Caribbean neighbors with donations of cash and food in excess of $3 million. Our banking and investment segment had an excellent quarter, as Don mentioned, with profits up 152% for the quarter, bringing year-to-date profit growth to 72%. This was driven primarily by First Global Bank. In addition to the revenue growth, which we spoke to earlier, FGB saw a meaningful decline in provision for credit losses. We continue to focus on effectively managing delinquency for the bank. Our investments in technology and our branch network are also providing greater access and convenience to our customers, and this has been rewarded with strong deposit growth of 18% or $5.5 billion year over year. Our financial inclusion push has continued with the opening of FGB MoneyLink mini branches, which will further improve access and convenience to a wider range of customers and continue to drive growth for the bank. In terms of our money services segment, we grew profits just under 10%, 9.7% or $220 million year to date, notwithstanding, as Don mentioned, the suspension of the 9 locations during the quarter. We continue to focus on protecting the interest of our customers and our customers' money, and as Don indicated, we're pleased to reopen 8 of the 9 locations. In terms of our food segment, we grew profits 9%. In addition to the revenue growth in Jamaica, we also managed expenses very carefully, resulting in the strong profit growth. In addition, our food business in the United States continued to show improved performance with improved efficiency and revenue growth. We spoke already to the revenue decline for UK business, which also impacted the profits for Grace Foods UK. Moving to the balance sheet, total assets increased by 2.5% or $3.2 billion to just under $130 billion, driven largely by growth in receivables, including the impact of the addition of consumer brands, as well as sales growth and insurance recoverables from our reinsurers. Growth in fixed assets also contributed significantly with the ongoing construction of our new headquarters, or new corporate offices in downtown Kingston, as well as our ongoing project to renovate our high-low stores and the renovation of the central sorting office, which we have now leased to a tenant for business process outsourcing. These were partially offset by a reduction in the pension plan asset due to changes in actuarial assumptions. The liability side was fairly flat, with strong growth in deposits by First Global Bank, offset by reductions in repos as FGB paid down higher cost source of funds to improve margins. The group's debt-to-equity ratio was slightly down from 31.5% to 29.5%, continuing to be low and leaving adequate space for funding of future growth. We continue to work to improve shareholder returns, and we were pleased to declare a dividend of 45 cents per stock unit, bringing the dividend year-to-date to $1.13, up 11% over the corresponding period in 2016. This will bring the payout for the year to over $1.1 billion. The GraceKennedy stock price closed at $42.53 on Friday, below our book value per share, and 5.5% for the year-to-date, or book value per share being $44.79. We continue to reinvest in our business for growth, investing over $2 billion in capital expenditure year-to-date. And finally, the group's equity position continues to be strong, growing by $2.4 billion to over $44 billion at the 9-month point for the year. Don?
Okay, thank you very much, Frank, our CFO, for that very, very comprehensive presentation. I invite callers to call in their questions, and we will be happy to take them. The first question is, Don, you mentioned about the Bill Johnson poll, but we were not very clear in your presentation of what the recognitions were for. Okay, thanks for that question. Thanks for that question, Stephen. Since I'll share the questions with you. I think that's the best way to answer that question. It says, since independence, which Jamaican companies do you think have done the most to create a good image for Jamaica around the world? And GraceKennedy came out on top, significantly on top. And I think we're all very proud of that as a GraceKennedy group. And the second question that was asked by Bill Johnson was, if you had the opportunity, which company or organization in Jamaica would you really like to work for based on the reputation it has for how it treats its workers? And I think that's the biggest compliment you can pay any company. And GraceKennedy, again, came out on top significantly. Any further questions? Mr. James, there has been a lot of talk, especially in the financial sector, about IFRS 9. Can you expand on that, of what is IFRS 9 and the potential impact on the GraceKennedy Group for, I believe, 2018?
Sure, thanks for the question. The group has been working very closely with our auditors, PricewaterhouseCoopers, to prepare ourselves for the implementation of IFRS 9, which comes into play at the beginning of the year 2018, January 1, 2018, and we're well on our way to be prepared for that. The implications really speak to how we assess, in particular, our assets and in particular loans. So the meaningful impact will be on our financial services side of the group, where we will have to review loans even once they are booked to understand the likelihood of default, looking at probabilities of default and determining how to effectively provision for these. So we will continue to manage the whole matter of delinquency very carefully for the bank and continue to evaluate our loan portfolio, making sure that we grow the bank but grow it profitably. So we're well on our way to being ready for the implementation of IFRS 9.
Okay, thank you. Thank you, Frank. Next question. GK recently presented their case to the Privy Council on the Paymaster matter. Can you comment on your outlook towards the final decision? Well, as this matter is still before the court, we are unable to comment in any details at this time. However, what we have been advised by our counsel is that a decision should be expected within 3 months. So we look forward to the decision of the Privy Council in another 3 months. My favorite question, colleagues, and this is a very blunt question. Don, how is the local corned beef going? Or I should say local bully beef. It's actually going quite well. As I had indicated, and I released a media release, that I had commissioned that internal project team to come back to me with a position within 6 months, which they delivered, and they, in fact, got technical advice on the matter. And basically what is showing is that we have the capacity to produce corned beef in Jamaica and meet the needs and the supply chain of the GraceKennedy group of companies. Having said that, well, let me say this first. I was just advised on Friday that there was a taste test done by on the local corned beef, and the feedback from our consumers or the people participating in this taste test was fantastic. They thought it was a great product. But here's the challenge. The challenge is that the cost of producing local corned beef, because of the supply of local beef, is going to be very challenging, and that is what we are trying to work through as a team. What I would say, based on what I have seen in terms of the report, this is going to call for a national effort in terms of production of beef to supply. I was very heartened to hear Norman Grant, a very experienced person in agriculture, basically saying that same fact, that is going to call for a national effort to try and produce enough cows, enough beef, so that we can process. I am a person, and the GraceKennedy Group is a person. We are very determined to ensure that we can deliver a great product, a great tasting product at a reasonable price. and that is our primary objective as it relates to local corned beef. The project team is still in place, they are very focused, and we are not going to give up until we can produce that product. Mr. James, given the share price is almost equivalent to book value, what is the plan to improve shareholders' value? Great question. Let me repeat it again. Given that share price is almost equivalent to book value, what is the plan to improve shareholders' value?
Thanks for the question.
And that one is from Nicholas.
We are always seeking ways to enhance shareholder value, and we do this through a combination of returning cash to our shareholders as well as reinvesting in the business for growth. We continue to seek to optimally strike that balance, and we're very pleased that we have been able so far for this year to increase our dividend payout to our shareholders by 11% and to pay out over $1.1 billion. We also have, as I mentioned, invested over $2 billion year to date in terms of greater efficiency for the business, in terms of greater access and convenience for our customers, and in terms of efficiency projects throughout the group. We have also noted with interest the passing of the legislation to allow for share buybacks, and we think this is a good move, a very positive move for the capital markets, and we commend the government for moving in this direction. And so we look to use a myriad of options to continue to enhance shareholder value.
Okay, Don, trying to see who this question is from. Don, how is GK Money progressing? I'm not seeing much growth for mobile money in Jamaica thus far. Thank you very much for that question. GK MPA, it's a new product. It's a new innovation to the Jamaican market. I would say that the performance up to October 31st has been reasonable, but there is a far way to go. So we have, and I'll share with you, GK MPA in terms of the app downloads and pre-registration, we have about 16,893 persons registered, and we have active users who use it on an ongoing basis of about 6,000. My opinion is that those numbers can increase significantly. So the strategy that we're using is basically twofold. We're going to continue to register the merchants, the vendors, and the customers, and have an awareness program in terms of the benefits of using GK MPay. We have concentrated very, very heavily in terms of the security of the product, and I would say that we are there as a premium product in terms of those features. What we are looking at GraceKennedy is how do we seamlessly have our other customers in the GraceKennedy group being a part of GK MPay. For example, FX Trader, our Western Union loyalty customers, and the list goes on and on. Our high-low customers. How do we seamlessly have them as a part of our GK MPay ecosystem? And that is where the focus on in terms of growing GK MPay. New product, we're going to be investing behind it. We have invested quite a bit so far, but I think it's going to be a great product with good registration in the future. A lot to go, a lot to grow. Frank James. This person sounds like a friend, Frank. They say, FJ. Let me first congratulate the GK team for an impressive third quarter result. Gross profit margin in the third quarter ended September 30th was 5.07% versus 4.09% for the same period last year. What was the revenue expense mix in the quarter to help generate this? Also, is there a margin expansion? Also, is this margin expansion temporary or permanent? If so, why? And that's from Leovani Dillon. Leovani, thank you so much. That's some excellent analysis in terms of our numbers.
Yes. Thanks very much for the question, Leovani, and thanks for noticing the improvement for the quarter in the margins. The primary contributors for that, the food segment and our banking and investment segment. In the food segment, as we mentioned, our domestic food continued to show good growth in revenue, and we did that while managing our expenses very carefully, managing our discretionary expenses and being smart, especially in how we use our marketing dollars around things like social media, etc., to get a bigger bang for the buck. The other significant area of improvement that we mentioned was our U.S. business, and that also contributed significantly to the improved margins. And we expect that to continue as that business is properly integrated, and we have made the transition there. So we have gotten past some of the integration costs of bringing that new business onto our existing business, and so we're seeing the benefits of that coming in greater efficiency, which, yes, we do expect to be sustainable. Also, as I mentioned, banking and investments did very well, and a big part of their improvement in margins was a reduction in provisions for credit losses. And again, the focus on improving our delinquency management and managing our provisions carefully for the bank, we expect to be sustainable.
Thank you very much, Frank. To Don, could the management speak to the use of CBL to grow in the business over the medium term? Revenue up 4%, profit up 1% year to date. Could you indicate how the growth in revenue will translate in increased profits in the upcoming quarters? Let me say that when we look at the increase certainly in profits, we have to normalize the one-off items. And you would recognize that the third quarter normalized, our profits are up 15%. CBL has some extremely strong brands. And Procter & Gamble, as you know, is one of the leading marketing consumer companies in the world. The revenue for CBL is about 2 billion Jamaican dollars, very profitable, good margins. We believe with the GraceKennedy depth of our distribution network, especially our van sales, we anticipate that the revenue in CBL will continue to grow and grow faster than it was growing before. I would also want to say that as a strategy for our domestic food business, that we are also going to be looking at other opportunities in terms of acquisitions of companies that can add value to the GraceKennedy Group. I previously stated in a release that part of the synergies, because as you know, we have World Brands and CBL, there are areas that we can eliminate cost, especially as it relates to warehousing and logistics and distribution. And we expect those savings to flow to the bottom line. CBL, as part of the GraceKennedy Group, Procter & Gamble, we are very optimistic that we're going to see significant growth going in the future. Our distribution network is really strong, and we expect that, and increased marketing, we expect that to make a big difference. Frank, James, what is the expected impact on the group of the recent revaluations of the Jamaican dollar? Brilliant. Frank.
Thanks for that, Don. So the group, as you know, we do export quite heavily, and so we do earn foreign exchange, but we also have a number of our inputs that also come from overseas, and therefore there is also an impact on the cost side of things. So we continue to manage that spread very carefully to ensure that we continue to earn good margins from the business, giving support to our customers where we can. We also believe that anything that will ultimately benefit the Jamaican economy will benefit the GraceKennedy Group. And so where there's greater disposable income for our customers because they're able to afford the goods that they can purchase, we expect that to help our revenues. On the side where we earn foreign exchange, of course, there can be translation adjustments that would be impacted by a revaluation in terms of a P&L impact to the group. But overall, we do not concern ourselves too much with trying to manage the exchange rate, because that's not something that we have control over. What we focus on is growing our business, growing our revenues, and delivering profits for our shareholders.
So let me just add to Frank, and thanks, Frank, that as any company, what is most important as it relates to a foreign exchange market is predictability and transparency. We are quite pleased with the Bank of Jamaica in terms of how they are managing the new auction system. The dollar is trading within a certain band, and I think in terms of planning for the future, that is acceptable. At GraceKennedy, once there's a stable dollar and we can price our goods accordingly, then it would make our future planning a lot easier. Where we have a problem is when the dollar fluctuates and continues to devalue, or it fluctuates too much. It becomes very difficult to plan your business. So to answer your question in terms of revaluation, we are quite happy with what we are seeing in terms of the management of the foreign exchange market in Jamaica. Frank James, excuse me, I was trying to, a question just came in, I'm trying to get it. Okay, okay, Frank. What caused the decline in the pension plan assets as at September 2017?
Okay, the decline in the pension plan assets is really driven by a change in actuarial assumptions, where the actuaries have estimated that the long-term inflation rate will increase by about 0.5 percentage points. And that has the impact of increasing the future liabilities related to the pension fund. What I must reiterate is that the pension fund remains in a significant surplus and continues to perform extremely well. So those changes and actuarial assumptions will continue to move through the balance sheet as the actuaries try to predict what will happen in the future. But the pension fund remains very strong and continues to perform well.
Thank you, Frank. Sir Don, how is construction at the new head office progressing? I would love to invite everybody to come down and have a look at our new head office. It's progressing extremely well. As you know, we have made a commitment to invest in Jamaica, to invest in downtown Kingston of US $25.1 million. We are just about on track to finish the new head office before the end of 2018. I must confess that we have had a few setbacks with the heavy rains in the afternoon, but I am hoping that we can make it up and finish our new head office by the end of next year. What I'll say to you, and I know we say even internally, the new corporate headquarters, but what it really is a consolidation of several GraceKennedy offices that are outside of the downtown area. So we have a number of offices in New Kingston that we will be relocating to downtown Kingston. Our executive office will be relocated from 73 over to what we describe as Lot 21. So it's a consolidation of offices outside of downtown that we are relocating downtown. We are so passionate about downtown. We believe that downtown Kingston is a jewel of the Caribbean, and we are going to be investing more in downtown Kingston. You'd have read, I hope, about our investment in the Central Sorting Office, where we are now partnering with Sutherland. We have 500 new jobs created there. We're going to be fixing the building. It's a lease arrangement with the government, which we entered to in 2015. And we are hoping that we can expand that facility to create more jobs for downtown as it relates to the BPO as we expand that sector. Our client there, for those of you who may be interested, is actually Amazon, who is our client for Sutherland, operating in Kingston, Jamaica, downtown Kingston, Jamaica, to be more specific. So to summarize, our new head office, Lot 21 as we refer to it, is going exceptionally well. I invite all to drive down on Harbour Street and have a look at it. And we are very pleased with what we are seeing. And we believe that the final outcome will be great. Okay, I'm getting the wrap-up signal already from my managers looking at me, Dale and Cleo. Time flies, Frank, when you're getting all of these questions. Once again, ladies and gentlemen, we want to sincerely thank you for taking the time out today of your busy schedule so we could give you an update of what is happening at GraceKennedy. Thank you so much for those who sent in questions. We really appreciate it. And if you have any more questions, any additional questions, please submit them to gkinvestor@gkco.com, gkinvestor@gkco.com. We will be extremely happy to answer them. So ladies and gentlemen, this brings today's briefing to an end. We thoroughly enjoyed it, Frank and myself, yes. And we will continue as a company to be very transparent and update the investors and the general public of what is happening at GraceKennedy in terms of these investor briefings. Thank you so much and have a good evening.